Welcome to the show, everyone. Today, we're diving into the undisputed king of crypto, the one that started it all and continues to lead the charge, Bitcoin. Bitcoin is the first decentralized digital currency, a groundbreaking innovation that challenged traditional financial systems. Think of it as digital gold, a store of value in the digital age. Created in 2009 by the mysterious Satoshi Nakamoto, a name that still sparks curiosity and debate, it lets people send money directly, anywhere in the world, without the need for banks or intermediaries. This peer-to-peer system puts financial control back in your hands, empowering individuals and fostering greater financial autonomy. It represents a huge shift from traditional finance, disrupting established norms, and paving the way for a new era of financial possibilities. Why care about all of this? Because Bitcoin is the foundation of the entire crypto market. It's the bedrock upon which the rest of the digital asset ecosystem is built. Its price movements ripple through every other coin, influencing the performance of altcoins and the overall market sentiment. When Bitcoin rises, the market tends to follow, creating a rising tide that lifts all boats. When it falls, the market bleeds, often triggering widespread corrections and periods of uncertainty. Understanding Bitcoin is like understanding the sun in our solar system. It's the central force that governs the movements of everything around it. Everything else revolves around it, influenced by its gravity and dependent on its energy. With only 21 million coins ever to be mined, Bitcoin is inherently scarce, a key characteristic that sets it apart from traditional fiat currencies. This scarcity makes it a unique store of value and a potential hedge against inflation, as its supply cannot be arbitrarily increased. But it's more than just price speculation and investment potential. Bitcoin introduced blockchain technology, a revolutionary concept that has far-reaching implications. It's a secure, transparent, and immutable ledger that's changing industries from finance, streamlining processes, and enhancing security, to healthcare, where it's being used to improve data management and patient privacy. So, Bitcoin isn't just an investment vehicle, it's the pioneer of a decentralized, transparent future, a future where individuals have greater control over their finances and data. In this analysis, we'll break down what the charts are telling us, examining key price levels and potential trend reversals. About Bitcoin right now, on this specific date, July 9th, 2025. Is the market currently exhibiting bullish or bearish sentiment? Are buyers or sellers in control? What signals should traders watch for to identify potential entry and exit points? We'll look at technical indicators such as moving averages and RSI, compare time frames from short-term to long-term to gain a comprehensive perspective, and discuss what it all means for your trading strategy and overall portfolio management. The ultimate goal is to give you the information you need to make informed decisions, to navigate these complex and often volatile markets with confidence and a clear understanding of the risks involved. Remember, always remember, knowledge is your best tool in the world of crypto. Let's get into the data, analyze the trends, and see what potential opportunities might be on the horizon for Bitcoin and the broader cryptocurrency market. It's all about making informed, not emotional decisions based on sound analysis and a well-defined strategy. Let's get straight to the point, shall we? We're diving deep into the Bitcoin charts today, and what we're seeing is quite compelling. Today, July 9th, 2025, a date that might just be significant for Bitcoin traders. Keep this date in mind as we analyze the current market conditions. The technical indicators are flashing a strong buy for Bitcoin. This isn't just a minor blip, it's a full-fledged signal that demands attention on the daily chart. This time frame gives us a broad perspective on the overall trend. This isn't just a random signal, it's not based on a single isolated indicator, it's a consensus from multiple analytical tools, all pointing in the same direction. We're talking about a confluence of factors here. Both oscillators and moving averages are aligned, a powerful combination that strengthens the bullish case, suggesting strong bullish momentum. The market seems to be gathering steam, ready for a significant move upward. Oscillators, like the RSI and stochastic, are giving a buy signal, indicating potential upward movement, showing there's still room for growth. The indicators suggest that Bitcoin hasn't reached its peak yet. The market isn't overbought, meaning there's less risk of an immediate correction. Momentum is building. The underlying strength of the market is becoming increasingly apparent. Moving averages are even more bullish, screaming strong buy. This is a particularly encouraging sign for those looking to enter the market. Short and long-term averages are aligned, confirming the strength and longevity of the uptrend. with price trading above key levels providing a solid foundation for further gains, like the 50-day and 200-day moving averages, which are often seen as critical indicators of market health. This setup points to a robust, sustained uptrend. It's not just a flash in the pan, it appears to have staying power. When oscillators say buy and moving averages say strong buy, it creates a powerful signal that's hard to ignore. It's a compelling story. The technicals are painting a clear picture of bullish potential. The path of least resistance is up, suggesting that the market is more likely to continue its upward trajectory. The bulls are in control. Buyers are dominating the market, driving prices higher. This is the kind of technical setup traders look for. It's a textbook example of a bullish market configuration. It's a green light for bullish strategies, indicating that now might be an opportune time to consider long positions, at least in the short term. While long-term prospects are also promising, the immediate outlook is particularly bullish. The data-driven basis for a bullish outlook is strong. This isn't just speculation, it's grounded in solid technical analysis. But remember, no signal is infallible. The market can always surprise us, so caution is always advised. Always manage your risk. Proper risk management is crucial for protecting your capital. For now, the technicals are clear. They're overwhelmingly bullish, suggesting a positive outlook for Bitcoin. Bitcoin is in a strong position. Keep a close eye on the charts and be ready to react to any changes in market conditions. Let's zoom out. Smart traders check multiple time frames to confirm trends. The weekly chart for Bitcoin, also bullish. The technical summary on the weekly time frame shows a buy signal. Great news for bulls. This means the daily strength isn't just a blip. It's part of a larger, sustained trend. Weekly moving averages are giving a strong buy, confirming a long-term uptrend. Price is holding above key long-term averages, providing a solid support base. Weekly oscillators are neutral, not overbought, not oversold. This is actually bullish. The trend is strong, but not overextended. The takeaway? Strong buy on the daily, buy on the weekly. This is confluence. Short-term momentum is backed by a solid long-term trend. This alignment gives traders conviction and reduces the risk of fake-outs. Both charts point in the same bullish direction. The trend is your friend. What does a buy signal actually mean for a trader? It's not a guarantee, just a statistical edge based on historical patterns and indicators. Traders look for favorable risk-to-reward scenarios, not certainties. A buy signal is a prompt to investigate further, not an automatic trade. It could be triggered by breaking resistance, a bullish crossover, or an oscillator moving out of oversold territory. Not all buy signals are equal. A strong buy means multiple indicators agree, boosting confidence. The summary rating aggregates this info into one actionable signal. But it's just a starting point. Do your own due diligence. Use buy signals as confirmation within a broader trading plan. Always set entry points, profit targets, and stop losses. Combine market signals with disciplined risk management. How do traders use all this info? Technical analysis is about forecasting price moves from past price and volume data. It's core for most crypto traders. The idea, all known info is already in the price, so studying charts is studying market psychology. Tools include chart patterns, support resistance levels, and technical indicators. Moving averages show trend direction, oscillators like RSI spot momentum, volume confirms trend strength. The real skill is combining these tools for a high probability thesis. When several indicators align, the signal is more reliable. Technical analysis provides a framework for objective, data-driven decisions. It helps remove emotion. Traders follow rules, not feelings. This systematic approach turns trading from a gamble into a strategic game of probabilities. To understand today's strong buy, we need to delve into the world of technical analysis. Let's break down the two key indicator families that form the backbone of our analysis: moving averages and oscillators. These two families provide different perspectives on price action. Moving averages are trend following. They confirm direction and strength by smoothing out price noise, giving us a clearer picture of the underlying trend. When price is consistently above both short and long-term averages, it signals a healthy and sustained uptrend, suggesting continued bullish momentum. Today, Bitcoin is trading comfortably above key moving averages, from the fast-reacting 10-day EMA all the way to the longer-term 200-day SMA. A strong, bullish foundation is being built, indicating sustained upward pressure. Now, oscillators are the market's speedometer, providing insight into the speed and force behind price movements. Measuring momentum, and helping us gauge whether a trend is accelerating or losing steam. They alert traders to potentially overbought or oversold conditions, signaling possible reversals. Today, oscillators are giving a buy signal, but not yet a strong buy. Momentum is positive and supportive of further gains, but it's not overheated or excessive. This is healthy. It suggests the rally has legs. The rally is steady and controlled, not parabolic or unsustainable. There's still room to run and grow before things get overextended and a correction becomes likely. The combination of a strong established trend, as indicated by the moving averages, and healthy, sustainable momentum as shown by the oscillators, is an ideal setup for bulls looking to capitalize on further upside. It's the perfect recipe for continued upside and potentially significant gains in the near future. But always watch the market closely for changes. Momentum, by its very nature, can shift quickly and unexpectedly. For now, however, the technicals are strongly aligned, painting a bullish picture for Bitcoin. You can't analyze Bitcoin in a vacuum. It dominates the entire crypto ecosystem. Bitcoin dominance measures its market cap versus the whole crypto market. High dominance means Bitcoin leads, low dominance means altcoins are gaining. Bitcoin's price action acts like gravity. When it rises, the whole market lifts. When it drops, altcoins usually fall even harder. That's why even altcoin traders obsess over Bitcoin's chart. A bullish Bitcoin signal is good news for the entire market. It signals a risk-on environment. Traders are more willing to speculate. Analyzing Bitcoin is step one in any crypto strategy. If Bitcoin is bullish, the wind is at your back. Today's strong buy for Bitcoin sets a positive tone for all digital assets. Technical analysis is powerful, but it's not the whole story. Crypto markets are driven by external factors, macroeconomic news, regulations, and narratives. Macroeconomic events like inflation data or Fed decisions can move Bitcoin, regardless of the charts. Regulatory news, like SEC announcements or ETF approvals, can cause extreme volatility. These events can't be predicted from charts alone. Smart traders follow news and understand the global regulatory landscape. Market sentiment and narrative also matter. A viral story or major endorsement can move prices. Stay tuned to social platforms for the pulse of the market. Combine chart data with real-world context for a complete view. The best traders balance technicals with fundamentals and sentiment. Let's bring it all together. Today, July 9th, 2025, the technicals are clear. Bitcoin is in a bullish phase. The daily chart flashes strong buy, confirmed by moving averages and healthy momentum. The weekly chart backs it up. This is a sustained trend, not a fluke. For traders, this is an actionable signal. Probabilities favor the upside. Now is a favorable time to look for long positions or add to existing ones. But remember, bullish signals aren't guarantees. Crypto is volatile. External events can override technicals in an instant. Pair bullish outlooks with disciplined risk management. Every trade needs a plan, entry, target, and stop loss. Never risk more than you can afford to lose. The signals are aligned, the trend is strong, and the opportunity is real. But stay vigilant, stay informed, and always manage your risk. That's how you thrive in crypto. Trade smart, stay